Hi everyone, my name is Alejandra, and today I'm going to be presenting my company analysis of Walmart for my financial modeling class here at Eastern New Mexico University. So the first thing I wanted to go over was some company history about Walmart. Walmart was founded in 1950 by Sam Walton. It started out as just a little discount store in Arkansas, but now it has amassed over 4,000 stores in the United States. They now even have stores in 27 countries and at least one store in every single state. The concept for Sam Walton's business was just to offer the same goods but at a lower price. And by lessening this margin, he's been able to get more business, and because of the volume, he's been able to remain profitable. Next, I wanted to go over a historical analysis of the company's financial statements for the past 3 years. So starting out with the income statement, the things that stuck out to me most were just how high the sales have been. So Walmart has been selling around $500 billion in sales, and somehow their net income has still been declining. Their sales for the company have been increasing over the past 3 years, but they've gotten lower in percentage. And this is because their main expenses, cost of goods sold, and selling general and administrative expenses have taken up almost 80% of those total revenues. So Walmart, only keep 2 to 3% of their sales. Next on the balance sheet, the thing that stuck out to me the most was that the current assets of the company have been increasing while the long-term assets have been decreasing. And the same is true for the liabilities. The current liabilities have been increasing, and the long-term liabilities have been decreasing. Now, this to me shows that the company is now preferring to keep more liquidable assets and liabilities that they can pay off within a year than to have more long-term. Next, the total assets and liabilities are less than half of sales. Now, when I look at the balance sheets for other companies, a lot of the time, their total assets will be, 100% of the sales for that year. The total liabilities will be like 110%, Of course, they'll be equal, but they'll be around 100%. But for Walmart, they've been less than half, around 40%. And I think this is a good thing because their net income is so low. So I think it's just relative to that. Next, the cash flow statement. I wanted to go over just that they have had in 2019 and 2020 net increases in cash and cash equivalents, but then a decrease in 2021. Next, I wanted to go over my pro forma assumptions. These are just the assumptions for the accounts that I made. So for the income statement, because the cost of sales has been decreasing over the past 3 years, I think that Walmart will still make an effort to decrease it, and the selling and administrative expenses will stay probably the same. And then for the balance sheet, I think the current assets and liabilities will continue to increase while the long-term ones decrease. And then I think the company will invest more in inventories just because it's what they sell and it's the most important part of their business. Maybe because prices of production have been, increasing. Maybe they want to buy more right now so that they don't have to pay more for it later. And then the statement of cash flows, the only assumption or rate I made was just for the depreciation and amortization of the property, plant, and equipment. And I just took that the rate of depreciation from the year before, and then I multiplied it times the property, plant, and equipment that I predict for the next 3 years. Next, my pro forma analysis. This is just what I think the results were from these from my assumptions. So in the income statement, with the sales from the with the baseline sales, there was a really large increase in net income. And that is largely due to the decrease I had in cost of sales. Because I decreased the cost of sales so much, only by 3%, their net income still doubled in that 1 year from 2021 to 2022. And then after 2022, they still had growth. Next, looking at the balance sheet, because they had more net income, I had to distribute the extra funds, and I distributed them into the cash and cash equivalents, and also to pay off their accounts payable. Next, in the statement of cash flows, in the baseline statement of cash flows, they had a net increase every single year. Next, looking at the company's intrinsic stock price, the intrinsic stock price that I found for Walmart was in 2021, $119.51. In 2022, $158.26. And in 2023, $231.50. Now, the current stock price this year is $152.11. So if you look at the price this year to the one I have for 2022, it's pretty similar. It's around the same amount, just $6, around $6 off. And so I think that my predictions are maybe around the same ballpark as other investors, but I'm not completely sure, positive that they will reach $231 by 2023, especially because in 2018 they were just at like $80, and that was 4 years ago. And so in 4 years ago, they've only had a $70 growth. I don't think maybe they'll have an $80 growth in 1 year, but I think they will have a growth. And so my summary and conclusions for the analysis are that Walmart has historically been very strong. They've always, when you look at their chart of their stock, they've had good increase throughout the years, and I think they have potential to grow even more. So I think that, the stock is slightly undervalued, and I would personally recommend investing in Walmart if you had the chance. And that's it. These are my references. Thank you.